So this week I'm happy to have Ron back on the podcast. Ron is at Courier or entrecourier.com or at Courier, Entree Courier on social media. And he's been on the podcast before and I've been on his. And today we're going to talk a little bit about some gig worker taxes. And Ron, it's nice to have you back.
It's good to be back again. I always enjoy it.
Yeah. So I know that you and I were talking right before we started recording that this is a pretty loaded subject. I know in the past, even like every year around tax time, and especially as it comes up to the D-Day, that gig workers are always scrambling. They're looking for, and they're putting out things on social media. What can I do? What can I claim? I notice it on my website. You probably notice it on yours that a lot of tax stuff gets pulled to, and it ends up in your most pulled articles, even if they're from years past.
Yep.
I mean, that just during tax time that's happening. And I know that they're looking at the deductions and whatnot, but you really have to keep up with those, even though I keep them up on the website and Ron has stuff on his too. You have to update this stuff. And I think that now this is kind of a perfect year to talk about that too, because the way that taxes are going to be handled for independent contractors and especially app-based on-demand gig workers, things are going to change a bit. And Ron, can you walk us through that a little bit?
Sure. Yeah, the big change is it's actually not on how taxes are done or what taxes you have to pay. Nothing has really changed on that. But the big change that came was when they passed the last stimulus. I think it was the American Rescue Plan. And there was like a little 45 words section in there that they put into that. I have no idea how that got snuck in there or how it related to stimulus, but it was just something somebody had to get that in there that said that for 1099Ks now, they have to start reporting that income at $600 instead of at $20,000. And so what that means is that a lot of people that were not getting their income reported on a 1099 in the past are all of a sudden going to have to face doing that. And the side that really got impacted by this the most would be with Uber and Lyft. And with Uber, by extension, also Uber Eats, because those two use that 1099K. Whereas, DoorDash and, Postmates, when they were Postmates, Grubhub, all use that 1099 NEC, which was already reporting your income if you made $600 or more. But Uber and Lyft have a totally different approach to all of this. And the thing, a lot of people are probably kind of confused. Why do you have a 1099 NEC? And how is that different than a 1099K? And that's, creates all sorts of confusion. And the way that Uber and Lyft do this, they're going to create a lot more confusion because you're going to get a lot of people that are actually going to get two 1099 forms from those companies. And those two are going to add up to more money than what they received because the way that they report income and what they call income and things like that are just, they're going to create, I think they always do, but usually they create problems for people that are full-time that are doing more than $20,000 worth of fares and rides and tips and things like that. And, anybody that's made less than that, they're actually not getting 1099s for a lot of the money that they made. And so this year, everything is going to change because of this change in the 1099K.
Do you think outside of the gig economy too? Or is this just going to hit the app-based gig economy where they report oddly like they do?
It's going to hit anybody that is getting paid through payment processors. And that would be like if you sell on eBay or on Etsy. If you, even if you provide services and you get paid by credit card, and, maybe your services, let's say, let's say I used to be in telecoms, so maybe you contract out to help somebody out with some, with handiwork here and there. and they pay you by PayPal or they pay you by credit card. And, it wasn't a full-time gig, but you never had a 1099 come in. So none of that money was ever reported to the IRS. Now you're still supposed to report that income, whether you got a 1099 or not, but, you know, the difference now is that the government knows. And that's what the difference is between this 1099K and the 1099 NEC, which kind of morphed from what was a 1099 MISC. It's just all these different 1099s, and the government just likes to confuse the heck out of all of us. But in the last year or so, they switched to what's called a 1099 NEC for gig work. For like if the company is contracting with you directly and they're paying you directly, any money that they pay you directly, they have to report on nowadays what's called a 1099-NEC, which is non-employee compensation. The other side of it is, and if you were getting paid, for your services or different things like that through a payment processor, that money is reported by a 1099K.
Mm-hmm.
And here's where the confusion comes in, is that, with Uber and Lyft, you're doing all this stuff that you would think was part of just them paying you, but they're reporting it on a 1099K instead of a 1099 NEC. And the reason for that is that they're trying to make it look like you're being paid directly by the customer, because they're calling themselves the payment processor. They're saying they're the intermediary, that it is just the customer paying you directly. And so they're reporting it now. And so, which is, it's all smoke and mirrors that it all ties in with this whole independent contractor thing. That what they want to do is make it look like they're not contracting with you directly. They're just trying to connect you with the passengers. Right. And so that's why they use this 1099K. Well, the problem is now and it's all part of this smoke and mirrors, is that, let's say you had $10,000 worth of trips, and Uber and Lyft are going to say that you maybe got $13,000 or $14,000. That's what they're going to report, even though they only paid you like 10. And because what it is they're saying, okay, you got paid the whole fare from the customer, and now $4,000 is their commission, And so you've got to watch all this stuff very carefully with these guys, because their 1099 that they're going to send you says you made more money than what you really made, but you can write off that other thing as a business expense. And so in the end, if you're paying attention, if you're doing it right, the amount that you're paying taxes on is the amount that you should be paying taxes on. But I think the problem is most people don't realize that, they're just going to see that 1099. It's like, did I really make that much money? You did not make that much money, but that's what they're reporting. But you got to pay attention. Usually I don't know Lyft, because I don't know their back end or anything like that, what things look like. But I do know, like with Uber, you log in and you go to your tax documents, and they'll have a tax document that gives you a report of not only how much money they say that you made, but how much they also say are, saying that we're the commission, 15, 25, 30%, whatever. And so you've got to kind of pay attention to all that. And it's just, I'm so scared of being confusing in the way I'm saying it, because it just is confusing the way they're doing it. And
I think it's been confusing the way that they handle it in the past.
Oh, sure. It's a lot easier for people that are on DoorDash or Grubhub, because it's like they paid you $5,000. They report $5,000.
Right. But I see that. I don't know. I mean, I guess you probably see it the same way I do, that that's how it should be done on Uber. If it's a referral fee or whatever, get all that together, because breaking that apart, I mean, like people already have a lot of trouble with taxes. I mean, I'm not a tax expert,
Right.
I go through mine multiple times and I'm like, what did I do wrong here? It takes me a while to get that straight.
Yeah.
So like to make it more difficult when I know that there's a way for them not to, I almost feel like, because like what you were saying, like, because to beat AB5, they had to call themselves a technology company. That
Right.
ended. Now they said we're an SaaS. We're a service as a software company, which is what you were saying,
Yep.
credit card processor, middleman.
Yep.
And so now they're going to use that for the tax season, and they'll go back to technology. It's crazy because they really are only an SaaS. They should have always just dubbed it that. They're
Well,
not a transportation company. They're not a technology company. And if they just did it that way, then like what we were talking about before the podcast, like with, um, Apple Pay or Stripe or any of those, they're very straightforward. Here's what we took,
yeah.
and
Well, and I think that's kind of part of the problem is, and some of it has to do with just this whole thing about whether they should be using independent contractors or whether they should be using employees. And this whole thing of using the 1099K, they've been doing that since before AB5 was a twinkle in Vina Dubal's eye.
right,
That it's been around for a while because there are all the other tests out there as far as what is an employee relationship and what is not. With the IRS test, it has to do with like it's all about control, and financial control is one of those things. And it's like how you're being paid and the ways that you're being paid. And so way back early on at Uber and Lyft, they figured out that it was like, okay, but if all we are doing is connecting people, then it really is a matter of the drivers are running their own business and all that stuff. Unfortunately, there are too many other things that are not, you don't own that relationship with the passenger. Um, it's not that they connected you with the passenger so that there's an independent relationship with them.
mm-hmm.
The passenger still pays Uber and Uber pays you. And the reality is that what Uber pays you is based on, I don't know 100% sure if this is true in rideshare because I don't do it in rideshare, but I know for the longest time, how they calculated the pay for drivers was different than how they calculated the driver fees or the passengers fees. So it wasn't that it's a straight 30%. The passenger's going to pay $20, and so you get $14 because that's 70% of that $20. They may have done that at one time, but they haven't been. And that's why it's all, a lot of smoke and mirrors. And to me, I think it's kind of a fraudulent use of the 1099K, because the reality is that Uber is still the ones paying us. Lyft is still the ones paying us. And I know for sure that on delivery, what the customer pays on delivery has nothing at all to do with what we get paid for delivery.
Right.
Our pay for delivery is still calculated based on miles, on time, and of course, a pickup and drop off. They don't make that public anymore as far as what the formula is, but it's still paid based on something totally different. So that's part of the problem, is that it's not a legitimate use of that type of reporting, because Uber still controls the process. They have the relationship with the customer. We don't have that relationship with the customer, all those different things. So it really isn't a true connecting us with the customer type of thing.
Right, because the
And
customer isn't giving you, the independent contractor, hey, here's my price, do you accept it?
exactly. Yeah.
It's
And
Uber making prices and reallocating them, or making them dynamically more when they're not,
yeah,
to place these people with riders. But it's like throwing darts. There's
it
no
is.
real, you're not actually picking anybody.
Yeah. And when you look at any particular trip, you can drill down now into what, they're starting to make it available, that it's like you can look at that and say, okay, this is how much the customer paid. And there's no consistency.
Hmm.
At one time, maybe you actually made more than what the customer paid. And then another delivery, you made maybe 25% because, and so it's weird. But, all of this is done to make it look like, that there really is that type of relationship. So you know, if I sold some stuff on eBay, for a long time, I used to, buy and resell, fix up, flip bikes and things like that. And I'd sell it on eBay. And so, I'd sell it on eBay, and eBay gets 10% cut and PayPal gets like 3% out of that. But
Hmm.
it's like, once my earnings go over $20,000 that I get paid through PayPal, then PayPal sends me a report that says, sends the IRS a report that said, hey, this guy received $20,000 from us. And that's the
Hmm.
1099K.
Right.
And so, that in that situation though, I'm the one actually doing it. And the cut that is taken out is based on what I'm paid. Uber is trying to make it look like that's the relationship they have with drivers when they use that 1099K.
So do you think that part of like what you were talking about with, you know, Uber's reporting and making it more difficult, and clearly I, at least me, I believe that Uber does that, all that kind of stuff, not that they do it on purpose. They make things even harder because they're just trying to mess around the books. Do you think that part of that's because Uber's now worldwide? They're a technology company that's a SaaS company that can't be defined, and there's no real definition for the gig economy. I know AB5's out there, and Mass 1234, and the Pro Act is being looked at, but really there's not a here's how we look at the gig economy for the old way of determining if somebody's an independent contractor, the IRS test. So
Mm-hmm.
coming up with that ABC test, even though the B prong doesn't work, do you think it's just Uber screwing around thinking they're never going to audit us? We're such a, I mean, how would you audit this system that's all analytics? It's all up in cyberspace. They're
Mm-hmm.
around the globe. They've been in 100 technologies, 99 they failed at.
Yeah, I don't know. That's the thing that I've always wondered. It's kind of like, with them playing that game like that, it's like nobody's ever thought. I don't know what, nobody's ever really dug into that
Like
side of
honestly,
things.
like even the drivers that have only worked a day and quit, they still show up in the database. Like if the IRS
Yep.
took on the task of, okay, fine, let's take on Uber, wouldn't that take up, and I'm over exaggerating, but wouldn't that take up like half of the American IRS team to go
Oh yeah,
through that kind of data?
it would. I mean, one thing that I will say for Uber Eats though, for Uber and Uber Eats, for Uber as a company, is that their data is all right there,
Mm-hmm.
and their data is accurate. I can go back and I can pull up my earnings, and I can pull up every single trip that I've done for 4 years.
Right.
And I can see how much I was
Very
paid and
time
how much.
consuming.
Yeah, it would be very time consuming, but you could take that, you could write something that could go through and sort through that data or something like that.
And
So
Argyle has things like that. They can do that too. They can pull it all
right,
for you. But that's
right.
one individual. Now we've had kabillion
Yeah,
individuals on the Uber platform, most, and they keep all those accounts active.
sure,
So if
sure.
you drove for them in 2015 and didn't call and close your account, you're still active.
You're still active. Yep.
So
And
it's
you
just I,
could,
I would just imagine over the years they've looked at this like, go ahead, take that on.
yeah. But all they'd have to do really is take a look, and they could go through and they could sort through, um, probably, they could write up a program that would just say, um, that it could just pull all their data from every trip that they've done. And then they could look at the payouts that they sent out to drivers based on that, and what the percentage of, what everything was and how much it fluctuated. And that right there would tell you, it wouldn't take much for them to be able to say, yeah, this is not consistent.
Right.
And because that data is there, I wish the other companies were as good as Uber in that regard. And again, I don't know Lyft because I've never driven for Lyft, but I
Well,
do know that,
Lyft is my interpretation of what we're talking about is that they're going to be the
yeah,
exact same way. However,
sure.
Lyft's always been very timely and they get it out. Boom. I
Yeah.
feel like with Uber, it's always screwing around. It's always, if I have a
Yeah.
question on either of them, my Lyft ones have always been a lot cleaner.
Sure. Okay. And I get, because what I could, and the reason that I bring that up is, I come from the delivery side.
Mhm.
And that's why, half the time I'm saying Uber Eats instead of saying Uber, because that's the side that I've worked with.
Right.
But, what I could tell you is that I cannot go into Grubhub or into DoorDash and pull up my records, going back.
Right.
I have to get all that information from my bank account records, or, with Grubhub, at least I could pull, I've still got all my emails because they send out an email every week. With DoorDash, you can't go back and see how much you made. You can't go back and look at any of that stuff unless you use a third party app, unless you use Argyle, or unless you use Para,
Right.
because, Para pulls out of that information.
Right. And with
So,
Para, we're still using Argyle.
yeah.
So I mean,
Yeah.
most the difficult thing about Argyle is when I use that term, people, you can go, I'm not going to hide it. The website's argyle.io. And if you want to go there, go ahead, but it's not for individual use.
No,
It's more of a
no.
B2B thing. Like they
Right.
work with Solo and they've worked with Para. They work with people they know, but they can pull all of your data for as
Yep.
many years as you've worked any platform.
Yep. Yeah. They work as kind of like a platform or a gateway for another company to be able to pull that information.
Mm-hmm.
And, and basically it's kind of a way to try and control information and try and, provide a protection against people getting into DoorDash and, hacking your information. If you've got a trusted company taking care of that connection to your earnings, then, there's less risk. But that's the problem is with these companies. I mean, it says something about the lack of transparency with them to not be able to go in and I'm going down a rabbit hole, I realized. But, you can't go in and you can't pull up your earnings history. And, so that's one thing though, that's good with Uber Eats. And then trying to get back to your question, the fact that they've got that data there and the fact that it's easily pulled down, it would be harder for them to fudge the numbers,
Right.
And there's so much that's in data, and it's just a matter of it's percentages and it's different things like that I think that they could look into the data as far as the way that things are paid and the way things are paid out, because you're not really doing an IRS audit. You're doing an audit as to say whether or not this is really the true use of a, third party processor application. And I think you could do that fairly easily, but it's just something that I don't know that anybody's ever tried to look that direction. And I don't know, there are so many other things that they use to try and determine employee versus independent contractor thing. But I think part of the problem with this confusion is, and it has to do with the confusion that I think most drivers have with taxes anyway, because it's just so different than our personal taxes. If you're an employee, you get your W-2, and you get your numbers and you just fill those in on your 1040 form.
Mm-hmm.
And that's how much you made. And it's real simple. It's cut and dried.
Mm-hmm.
And the confusion comes in, what kind of things, standard or itemized deductions and tax credits and all those things. But as far as your income, it's really straightforward. But the problem then is that as independent contractors, our income isn't the money that we got from DoorDash or from Uber Eats or from Uber or Lyft. It's not the money that we received. Our income is what's left over after our expenses. It's our profit. So
exactly.
Yeah, if you had, $24,000 worth of income, and your expenses were $14,000, your income's only $10,000.
Mm-hmm.
And it's the way it is with any business. That's
Right.
how it is with any business. But the problem with it is that, and this is where I think kind of that confusion of being an independent contractor is, you're being hired as a business and not as an individual. And that means you've got to do business taxes, and you've got to do business bookkeeping, really, to understand what your taxes are going to be. And I think you've got a lot of people that are still thinking that it's like, oh, I'm an employee. And in fact, one of the most searched for things I get on my website is DoorDash W-2. There's no such thing as a DoorDash W-2, but there's a lot of people that think there should be. And so, one of the biggest questions I see on social media, people asking, where's my W-2 for DoorDash? And most people think that 1099 is the same thing as a W-2. I think too many people don't realize that you can take your expenses and not worry about whether you're itemizing or, doing your standard deduction. None of that matters whether you itemize or use a standard deduction, because you're reporting your income as a business. And so it's just this idea that you've got millions of people that are pushed into filing taxes as a business that have no clue that they're doing taxes as a business. And, and I think that's part of the dishonesty of some of these companies is saying, okay, we're going to hire you as an independent contractor. If they were straight up honest that we're going to hire you as a business, they probably wouldn't get a lot of people to sign up, because they're like, I don't want to be a business. I don't want to deal with that garbage.
No. And also at the end of the year, why are your earnings and your tips separated on these forms too? Because when I worked in the bar industry, you made your tips. You're supposed to claim everything you made in tips, but you have to claim the credit card ones. Mm-hmm. Most POS systems are set up to not let you clock out till you do.
Right.
And if you go under, try and report under what it did, it'll say, no, you at least have to do this. So sure. I know that that's a paycheck employee, but those taxes go against your paycheck right away. Like, I can't tell you the amount of times where if my tips are through the roof and there was a bunch of home baseball games and I was just killing it, I'm expecting my check to be $0.00.
Oh,
because usually at the $2.13 or $2.18 an hour rate that a bartender gets,
right,
you'll zero it out by your tips. And I know that's under the employee model, but and I know that rideshare drivers don't get a ton of tips through the system, but some do. And it always made me wonder, like, it's almost like, even, I know you're still your own business, but it's almost like that should be taken out daily when you're getting paid.
Okay.
Or needs to be figured into the formula somehow, and then readjust. I don't know how to explain it. I'm
sure,
but it's something that I've tried to wrap my head around before. Like, why, if you were tipped $2 on every ride all year, is that being dealt with correctly?
Yeah. And that's a good question. I know that I do know that with DoorDash and Grubhub, that basically they just send you a 1099 that just gives you the lump sum. Your total,
right? So your earnings
tips
tips are in there too.
Yeah. So
and these are too when it comes down to it, but they do separate it. And I always wondered about that, because I'm like, why are you writing tips? Because people like me in the service industry then look at that column and go, well, I know how to deal with it in the service industry, but what am I supposed to do here?
Right. Yeah. And yeah, I don't get the point, I guess, of breaking that down. I think other than just for informational purposes.
Right. But I mean, they don't show you any other information. So why that one thing?
Yeah. I like knowing at least, but it's more just for my own information that, okay, if 60% of my income as a DoorDash driver is tips, then that's usually a pretty good thing. If only 25% of my income as a DoorDash driver is tips, that means I'm probably not picking the right deliveries.
Right.
So there's value in it that way. But when it's all said and done as an independent contractor, it really doesn't matter where it came from because it's just income. That's just
Right.
income for your business. And so, yeah,
That's
I,
why I always wonder about the sloppiness and the extra lines on their forms, I guess is what I'm saying then. It should
sure.
just be able to come through as here.
Yep.
Real simple. Here you go. There's your number.
Yeah. Yeah. It's like I said, I think the way they do things, you know, it's confusing. It's them trying to kind of game the system a little bit and choosing the type of forms that they're using. But it's also throwing a lot of people kind of just into this environment where you're, you're running a business and now you got to file your taxes as a business. And that's a little bit, that's a little more involved than most people are ready to do.
Right.
And yeah, and so I try and put a lot on the website to help explain how they work. Ultimately, you really need to get with somebody that understands, especially self-employed taxes, to help you out.
It's almost like
Because
Uber needs to create a department though. Like so my girlfriend, she does finances. She actually does taxes. So this is what she
Mhm.
does. And she gets mad at me every year because I use TurboTax. I have for like 5-6 years. But I mean it works for me. I know it. I use it. It's
Sure.
just they have my previous year. It's just where all my stuff is. I know it well.
Well, and I'm going to say for TurboTax, especially on Uber and Lyft, they're probably the best ones to use. Now, I
Mm-hmm.
usually use H&R Block, but TurboTax knows what to do with your stuff. They know that, and I just played with it just to see what it's like for the first time, this year. But it's like they've got a thing where they can actually log into your Uber account and into your Lyft account. I think it's in both of them. And it can pull that information, and then it's going to know that, okay, here are these extra charges, the commission part that supposedly is going to Uber, that Uber's claiming more. So it kind of knows what to do with that and how to treat that so that you don't end up, getting suckered into this thing that you're going to pay tax based on the $15,000 that they tell you instead of the $12,000 that
Right.
you actually received. So that's definitely, once again,
But
that's the thing with taxes, is it's easy to go down rabbit holes. I
right.
just
Well,
about went down it
but
again.
the one thing I was trying to stamp onto TurboTax is they have a way to pay for, so federal's free, and then you pay for your state, but then you can pay a little bit extra to have a TurboTax person review it.
Right.
And you want to do that because they really do run eyes over it, and they will send it back and say you need to do it again. Here's the
Sure.
all that kind of stuff, and they give you the support all the way through. I almost feel like Uber they almost need to put their stamp on anybody's taxes that's worked for them. Like that
Yeah.
second set of eyes that's on these taxes.
Right.
And I know
The
you might not want Uber going even through more personal data you have, but at least like that portion should be mailed by into it and say, is this correct on this person?
Sure.
Just
Sure.
relevant to each platform.
Sure. And that would be helpful. But again, the problem with that goes back to the independent contractor relationship. If you
Mm-hmm.
were an employee, that would make a little more sense. But if they did that, it actually creates another layer that could be used as evidence that they're using employees.
And we all know
And
people
so,
could go back on their credit card statements. But however, if you went to any customer you had that year and said, hey, that time I gave you a ride 3 months ago, do you remember how much? They wouldn't even, did you give me a ride? How much?
yeah,
What? And yet Uber's the one with that information.
right,
They're the
right.
ones who can say, yes, that is correct.
Yep, yep. No,
So, I
and that's very
mean,
true.
so in some way, I know that, again, I know it gets technical because it gets to the independent contractor thing, but it's like you can't go and verify with the independent contract with the end result customer after
Mhm.
Uber, the person you're actually driving. You can't go back and get to them and say, hey, I'm being audited. I need to get some information from you. And
Right.
I know that you wouldn't do that anyway with your 15,000 deliveries and rides in a year. However, it's Uber that has that information and can say, boom, stamped. Yep, that's correct for this person.
Sure. Well, and to a certain extent, they're doing that by the tax documents they give you.
Sure.
And that's totaling all that stuff up. On the flip side, it's like my website business, and so I make money off of advertising, and I get some money off of some recommendations for certain products that if people buy off of that, I get that. And so there's a handful of different places that I get money from, and that's my responsibility to keep track of that stuff. And that's part of what goes with running a business. And again, I think some of the issues would be solved for a lot of people if they treated this more like it were a business. And if they were kind of paying more attention to, okay, I need to keep track of what I'm spending and what I'm driving, especially, and what I'm making, and if your income is just from sources that were reported on a 1099, that lets you cheat a little bit because you can take your 1099 information.
Sure.
But here's the other thing that's going to happen with this change with that 1099 now, in that a lot of people on Uber and Lyft were receiving 1099s in the past, but it was nowhere near as much money as they had received. And it was on a 1099 MISC, or last year on a 1099-NEC, which is kind of the new version of it. And that was because they report two different types of income. So your fares, or for Uber Eats, the trip charges, your fares and your tips that were done through the app and all of that stuff are kind of reported through that 1099K. And that's the one that used to be the $20,000 threshold. And if you didn't make more than that with that, then they didn't send you a 1099 for that. But
which is going to be a lot of drivers.
Yeah, it's going to be a ton of drivers.
Because I mean, if you just do the math, if 85% of rideshare drivers work less than 25 or 20 hours a week, whatever it is,
right,
that means a good percentage of that probably didn't clear that.
No. And if this is the first year they did it, it's not going to make a whole lot of difference because it's just the first year and they deal with it as it is. But if you've been doing this for a few years and you never really got very much in 1099 forms, you're like, oh, okay. And then all of a sudden this year they send you something that said you made $20,000. You're like, crap, where'd that come from? How am I going to pay the taxes on that? And so you're actually still supposed to pay the taxes even if you didn't get that 1099. But
I wonder why such the major adjustment from 20,000 to 600.
Well, because originally it had to do with the fact that this was for credit card processors.
Right.
And so when they first set that threshold at $20,000, usually this is like for people that are running a store, or, whatever type of business or something like that. And they're getting paid through that. And so, the thing is let's say I ran a bike shop and I get $20,000 worth of sales, that I had probably $10,000 to $15,000 in cost. And that I had rent, and that I had a lot of other expenses. And so even though maybe I had $20,000 in sales, I might have only made $1,000 in profit.
Right.
So that's why they would set that bar really high, because it was like you had to sell a lot before you really got to a point where it was like enough income to be worth reporting
and to be on their radar.
Yeah. So to be on their radar,
because even freelance writers or graphic artists or whoever who take in 15,000 in the past, that hasn't been a worry to move it down.
Well, and I think that's what has changed a lot of things. Really, three things that have changed. One is eBay and Etsy. People selling through those platforms. They're just selling out of their garage, and all of a sudden now that margin, that change, that, that margin is different. If you sold $20,000 on eBay, there's a good chance that maybe you made $10,000 actual
Right.
profit. Freelancers is another one. It's not that freelancing is new, but it's easier now to get paid through Stripe or through PayPal or things like that. So you've got more of them that are getting paid, and a lot of that is clear, straight profit. If I sit down and I write, an article and I get a couple $100 for that, I don't have a whole lot of expense around that,
Right.
So the profit margin is higher on that. And then rideshare with Uber and Lyft using the 1099K and, other gig economy things. So it's more like just in the past few years that you've had a lot more people that are making some real money that's not being reported.
Right. But I almost
And
feel like it's like with if the gig economy never had existed, and even if they wanted to do something like this, we would have seen 20,000 turn to 15 or
yeah,
14, something a little more of a, because
yeah,
that's, I mean, we're talking, 19,999 to zero kind of thing. It's like
sure.
you're
Yeah.
almost going down to nothing. You're going
Yeah.
down
And
to
that's where it is such a huge, it's such a huge difference. And I think that the reason there were some states that actually in their state, they had different margins, so they said, no, you need to be reporting it at 10,000 or something like that. So I think there were some states that had kind of stepped it down a little bit, but it was just kind of like, I think ultimately what people did is they looked at the other 1099 stuff and they said, why not just make it the same thing on both sides?
right.
Which I think actually makes sense, but it's just such a big shock to the system for a lot of people that are used to not having those 1099s come in,
Right.
and again, the thing I would stress is it's not that our taxes are changing. It's just that Uncle Sam now knows that you made that money when he didn't before.
It
And
just seems like
that's
such a
where the change
bad
is.
year to do it,
It
of
is.
all
Yeah.
things too. I mean, like, really, you picked a pandemic?
Yeah. Yep. And
I mean,
and in fact, you picked a bill that was providing relief for the pandemic to slip that change through in.
right. Yeah,
It's
exactly.
just,
I mean,
yeah.
you've I don't know, it's just it, like you said, it's going to confuse people, but I think it's going to hurt a lot of people too.
I think part of the reasoning for them doing that actually had to do with the fact that it's like, man, we are putting out a crap load of money. We got to start figuring out how to get it back.
Mm-hmm.
And so, so basically let's clamp down on the little guys, let's
Right.
clamp down on the gig workers.
Mm-hmm.
It's like, okay, thanks guys. What about, what about Jeff Bezos, and maybe take a little more money from him first. But, it is what it is. And I think that's the thing, is we need to understand that that's coming. The thing that I think, as I was saying before, that a lot of people also have to be aware of is you're probably going to get two different 1099 forms from Uber and from Lyft. You're going to get one that reports your delivery fees and your tips if you're on delivery,
Mm-hmm.
or your fares and your tips.
Mm-hmm.
And that's going to come on the 1099K. You're going to get a second one that is, because that 1099K is supposedly, that's the money that you got from other drivers, or I mean from the passenger or from the customer. That's what they're saying is, the 1099K is a payment processor form. And so what they're saying is that your passenger or your customer paid you this money, and then we took a little bit out of it. And so that's the one form. But then the money that came directly from Uber or Lyft, which is usually like the incentives, from the boosts and the surges or whatever that, surges that the customers didn't pay. So, if they give you, if they give you extra money to go out and deliver on a certain time, or for doing so many deliveries or so many rides, or referral money, that if you referred your friends, and that is reported through the 1099 NEC. So you're going to get two 1099 forms from these companies. They're both legitimate. They're both extra money. They're going to report more money than what you actually received. And so you got to go into the tax documents from these companies and make sure that you understand what they are calling the commission fee that is charged to you. Because if you made, let's say if you made $12,000, Uber is going to report that you made $15,000, but you had $3,000 that you paid to them. So you've got to make sure that you're writing off that $3,000 so that your taxable, or that your legitimate amount of money that you got is the same amount that they actually paid you.
Right.
And so, again, it's the way that they do things. It doesn't have to be that complicated, but it's just the way they do things that made it complicated.
Right.
So,
yeah, I remember that I used to get something in the mail, but then to get the details, you had to log in.
Yeah.
And look at everything.
Yep. You had to pull up your tax document.
Right. Within the Uber platform, though, which is another weird thing. You had to go in there to do it.
Right.
It's like the rest of the year. Why can't I do this? Why can't I? Or why can't I look at the data I want to see?
And the problem is, and it kind of leaves drivers exposed a little bit, because they never give you an ongoing, like they never give you a receipt actually for that.
Mm-mm.
But they do give you at least that tax document that shows how much they are saying was their commission or the fees that went to them. So, the main thing is you want to make sure that you're looking for all that stuff, and that you want to make sure that what you're actually, basically what I'm saying is you want to make sure that you're paying attention to what you really received.
Right.
So that you're not paying taxes on more than what you received.
Right.
And so this is not going to be as much of a problem if you do like all DoorDash, or if you do anything with any of these companies that use that 1099 NEC, DoorDash, Grubhub, I think Instacart, most of the main ones like that on the delivery side. But if anybody is using that 1099-K, that's where you got to really watch out that they're not playing some kind of game with you or something.
Right. And I'm sure that as we roll into the new year, I'm sure you'll probably do some pieces on taxes as it comes closer.
Yeah. I'll have some things up there. And I've got a couple of things that kind of tried to break down. I've got 3 or 4 articles that were, and I'll get you the links for those, because one was, why does my 1099 say I made more than I did? And that deals with that whole commission thing. Or why did I get 2 1099 forms? Or, why did I, one that I wrote was really tied to the old system, is like, why does my 1099 say I made less than I did? And that was because all you got was the 1099 NEC that just reported the incentives and things like that. And they didn't send you a 1099 for your other stuff. But with that change, that's going to be less likely to happen.
So I guess one of the biggest takeaways for me from us talking today would be that, especially that main core 85%, especially of that group, the subgroup of that group that works 10, 15 hours a week, who probably is just barely creeping under 20, is going to really need to replan this year for taxes.
Yeah. And, the main thing is just be ready, because you're going to see, if you've done this in the past, you're going to see, a lot more get reported on 1099s than you ever saw before.
And I guess that's what I was saying, is that, like, I mean, you should have been claiming everything anyway,
right.
But I mean, like any ways that you were doing things or whatever, now there's going to be a different paper trail to it.
Yep. That's the
not like
thing.
You're doing illegal things, people, but just in case you had your own way of doing accounting and it seemed to be working. And even if you think you're doing it right, you could find out this year, maybe you've been doing it wrong. You might, I don't know. I might even see this as you might have to look at past taxes. Like, did you file them right? Because people that might open their eyes who really are blind to taxes, who are like, wait, I never claimed any of that the other years and I made it. And
yeah, you want to, because there's, it could go both ways. It could be that you didn't claim enough.
Right.
It could be that you claimed too much.
Right.
because you weren't paying attention to that, extra charge, or the kind of the fake extra pay that you never really received. They basically, they say they paid you $3,000, but then they say they charged you that $3,000 back. So you
Right.
never saw it. But, and there's a couple things. One is it's going to be a lot harder for gig workers to slip under the radar for taxes this year because of that change.
Mm-hmm.
You're going to have drivers that are paying more in taxes than they had before. And I wouldn't even say that a lot of them necessarily were trying to duck their taxes, but it has more to do with, we've been conditioned to think that you pay your taxes based on the forms that you receive. So when you're an employee, you pay your taxes based on your W-2s. So you think the same thing. It's like, okay, that 1099, well, that's the money that I made, right? And so you get a lot of people that, had never really explored what it really is, that, that they're, the business accounting or any of that type of stuff, because you just don't think that you need that. And you're thinking that this is just, this is just a little way to make some extra money. So you're not thinking of yourself as a business. And so probably didn't even realize that you made more money, even though you didn't get a report that told you that you made that extra money.
Right.
And, so I think the big lesson out of this is mostly, it's just like, pay real good attention to what you really made. Make sure that you're paying attention to any of this expense stuff, and now that we're coming into the fourth quarter, if you haven't been tracking your miles, you got to make sure that you're doing that. And you gotta do whatever you can to make sure that you capture whatever miles you drove before. And, just
You
all of
gotta
that stuff.
you gotta have some form of accounting. I mean, you don't need to be doing it digital, but you gotta have paper and pencil, something. It can be archaic,
Sure.
but you need to have
Sure.
something. You need to be doing something,
You
because
got to
when
be
those
tracking.
questions come up, I know people who, well, I think I do, who have just entered info,
Sure.
and that's going to become a more delicate situation.
Yep.
If they really wanted to dive in, because they would
Yep.
have the data to go, no, you didn't drive that many miles, or
Sure. Yeah. I see this probably at least once a month, if not more, on Facebook forums where somebody says, hey, where can I get my miles from DoorDash? Because I'm being audited and they want a record of my miles. They just wrote something down. And if you don't have a record, you can have a problem. Hopefully you never get audited. But if that happens, and it's a higher probability of doing it because you're writing off thousands and thousands of dollars of mileage, which nobody does except for gig workers, really. And that's the kind of thing that just sets a flag there for the IRS. So you got to make sure you got a record. But at the same time, every mile that you drive for business, you should be claiming that, because that is a real expense.
True.
And but you just got to track it. And probably the biggest thing out of this is treat this like a business, and and keep records. And I think that's the thing that'll keep you out of trouble the most. But then the second thing that I would just say is, and then make sure you got somebody that really understands this tax stuff to help you out.
Yeah, I was just going to add that too. Like, if a lot of, obviously if you have an accountant, my guess is your accountant's going to say, let's talk about some things. But if you're using any of these online things, even I do it with mine.
Sure.
But if, pay that extra money maybe this year. I hate to just tell people to spend money, and I'm not advertising for any specific one, whatever you use. But if you're using some online software, almost all the big ones have some kind of extra payment that isn't a ton, where they'll check it. A real person goes over it. And I would think of all years, this might be a year to do it.
Yeah, absolutely. And whether or not you're getting like a CPA and somebody locally, or whether you're using kind of that advanced service from somebody else, if you've got, we just talked about a lot of things right now that can be really confusing.
Mm-hmm.
And I'm scared to death that the way I said a lot of things just made it more confusing, But the whole point of this
But maybe that
is
starts a conversation, though, or at
it
least gets
does.
your mind moving.
It
That's
does.
the point of the podcast today, I think, is
And the whole
you
thing
need
is
to think about this.
if you're confused at all, you got to have somebody help you through it.
Yeah.
You got to have somebody help you out that isn't, because it's the money you spend will be some of the best money you could spend. And 99 times out of 100, I would be sure that it'll actually get you more back, or reduce your bill by, far more than what you spend,
Mm-hmm.
so it's a good investment. But yeah, just the biggest thing is just be aware of all this stuff. And especially this year where some things could be changing in a big way if you've been doing this for a few years.
Right. Well, make sure to get us or get me those links so I can put them into the show notes.
Absolutely.
And yeah, you can find Ron at entrecourier.com. I know on Twitter, what other socials?
Twitter's where I'm most active. Facebook, I've got a page that I hardly do anything on. Instagram, kind of the same thing. Pinterest, on LinkedIn even.
So, but all your links are on your webpage too.
Yeah.
So
it's all Entre Courier.
Right. Entrecourier.com. And then I know on Twitter and the other ones, you can probably just search him, find him that way. But his handle on Twitter is at Entrecourier. Yep. But thanks, Ron, for coming on today. And
thanks for having
I'm sure talking this through, even if it confused people, because that should be the wake up call. If you got very confused today, it should be it shouldn't have been like, I don't want to deal with that. Because I think that's the same thing that people run into when April 1st comes around. They're like, I need to do my taxes.
Yeah, don't wait till April 1st.
You know what I mean?
It's better
but a
to
lot
get
of people
confused and scared now while we're still in the year than it is to all of a sudden kind of be at the end and it's like, oh crap, what do I do now?
Right.
So, because you got more time to get it sorted out.
Right. All right, Ron. Well, thank you very much for coming on today, and we'll chat soon.
All right. Sounds great. Thank you.
Mm-hmm.